All right, guys, thank you so much. All right, so we're here on a Friday morning. So a couple of things. I am recording this, and I'll update this recording to your member account. That way you have an opportunity to review it as well. So I want to make sure that everyone is using the latest version of the AutoPilot, which we had some updates on it. So I want to make sure so far, does everyone have the latest version, version 2.1? If not, let me know. We'll make sure that you get that up and running. Okay. The next thing is going over the settings, because there are a few settings that I want to make sure, especially with the new software, that we have them set up correctly. Okay. So if you look here, I'm going to use this chart here. That way it doesn't interfere what's happening here. If you come here to the strategies and we look here at the AutoPilot, the one thing that you should change is the break even and the trailing stop. So this is an upgrade that we did. We added the trailing stop, but the trailing stop and the break even, these values have to be adjusted. Okay, so the first thing I look at is I look at the ATR, and on the tick chart it's a little different than a minute chart, but if the ATR is slow, let's say that the market is maybe at 2 points or 2.5 points, really what that tells me that we're kind of in a slow environment. So the trailing stop and the break even could be adjusted for those conditions. So that really is one thing. So we look here at the break even, the value is 16 ticks, so that's 4 points. I'm going to change that because the market is slower. It's never going to get to 4 points, or it may take a very long time to get there. So I'm going to change that because the market is slow. And let's say we only want to see the market move 7 ticks before it goes to the break even. Then I come here to the trailing stop, and only after the market makes 7 ticks will I then, which is the break even, will it then go and move into the trailing stop. So it's important that we do this correctly, because if the break even is larger, a larger value than the trailing stop, if that happens to be true, then all we're going to do is trail a stop first, and then the break even will appear. So I want to make sure that we have the break even first as a smaller number, 5 ticks, 6 ticks, 7 ticks, and then the trailing stop after the market moves to a break even will then begin to trail a stop. Okay, so I think that's important for you guys to understand. So make sure we have this set correctly. So what this is currently saying is that after the market moves 7 ticks, break even. When it moves to 8 ticks, trail a stop. So similar to what you're seeing here, it went to break even first, and then it's trailing it from where the break even happens to be. Otherwise, if you have your stop down here somewhere, it'll trail your stop from your original stop loss. Okay, so please tell me if that's clear for everybody. Terry? So 7 ticks in your favor, correct, Terry? So it has to move 7 ticks first in profit in your favor.
Order filled.
It'll then move to break even, and then if it goes 8 ticks, it'll then push up a tick. So now you're 1 tick above where you're entered, and then if it keeps on going higher, it's going to trail it from that point forward. All right. I would say when the market is slow, right? So if you think about when the market is slow, and so you're saying, does that apply? Jeff is saying, does that apply to when it's less than 2 points? I would say if it's less than 2 points, we're really slow compared to what we've seen in the past where the market's been 5 points, 6 points, right? So the slower the market moves, typically the less it's going to travel, less of a trend we're going to have, or the longer it's going to take. So when you think about this, I think about it, well, I can only take a profit target that's 5 points, 6 points, 10 points if the market is able to actually make that move because of the volatility. Otherwise, I'm never going to get there. So if the market is slow, 1 point, 2 points, 2.5 points, take a smaller target. So even if you take a look here, where you have here the profit target of 28 ticks, it's a very large target. it may never reach that if the market is slow. So change that to, let's say, 16 ticks. That's just 4 points. And change your stop as well to maybe closer to 20. So that way, what we're doing is we're adjusting the current conditions, and you don't have to do this every day, but if you notice that there's a pattern that the market is, let's say 2 or 3 days, we've slowed down consolidation. And actually, just so you know, sometimes, let me just cancel this out. Sometimes when I think about is the market slow or is the market fast, I typically look at a daily chart and I add the ATR. I'll give you a little bit of teaching here on knowing whether the market is in a slow environment or a fast environment. So if you take a look here on a daily chart, I just have the average true range setting of 4. Typically, the markets work in cycles. So you see here at this point here, every 4 days, the market was moving about 120 points. Let's say 127, 125, 100, even above 100. That means that every day the travel, the way that the market travels is about 100 points. So that's a lot. Now, if you take a look at where we are now, the market is traveling at about 50 or 60 points per day. So it's actually half of what we had back in July and August, or even November. If you take a look here in November, this was above 100. So sometimes if you want to ask yourself what kind of cycle we're in, the markets work in cycles. We have slow environment, slow cycle, a couple days, maybe a week or two, and then we have volatile, high volatility. So it's the same thing. If you know the type of cycle, I guess you could say, that the market is in, don't expect it to travel that far if we're in a slow environment. Does that make sense to everybody? Andreas, let me know if you're okay. Antonios, let me know if you're okay with that. Guest, I don't know who guest is. I'm going to ask you to log out and log back in for the guest. That way I know who's in the room. By first name only, okay? All right, so again, we're looking at the market moving a little bit slower. If you see it at 2 points, 2.5 points, take a smaller target. Don't expect the large moves. Usually the market doesn't trend. So is everybody's okay with that? If you're new to day trading and want to learn more on the benefits of trading the markets, visit Daytradetowin.com. Join the next mentorship class starting later this month, and subscribe to the Day Trade to Win YouTube channel. We focus on price action and work exclusively with new and beginner traders who want to learn more on how to prosper from trading.